This is the Homebuyer Seminar. Welcome. I'm glad you made it. So today we're going to be talking about, our special topic today is going to be about saving money to buy a home. Very important item. So I want to let you know that this presentation is brought to you by the non-for-profit program called the Center for Homeownership and Community Enterprise. I'm your host, Mark Giles, and we'll be doing this every week to enlighten our home buyers. We want to improve our community by teaching you about real estate, about mortgage finance, business ownership, and how to provide you information that you can take advantage of right now and implement right now to achieve your goals. All right, so we want you to own your power, own your self-worth, and live a dignified, independent lifestyle and make a lot of money at the same time. All right, so we have 4 people in here now. That's great. Okay, good. Everybody's just joining in. Next, I'm Mark Giles. I have a background in real estate as a licensed mortgage loan originator. All right, that's the official title. I've been lending 20 years now, mortgages for people who want to buy homes. We've helped tons of people and it's very exciting. And so my mission is to educate home buyers, real estate investors, and business owners so that we can all go to our next level. Because when we all grow, the community gets better and we need each other to prosper so we can live in a wonderful community and make more money and enjoy life. Okay, so right now I'm licensed in New York, New Jersey, Connecticut. But once again, this is brought to you by the Center for Home Ownership and Community Enterprise, non-for-profit. And this is all about education. So I'm originally from the Bronx. All right, currently I live in Westchester with my family. And like I said, I also have a license as a real estate agent. I've been practicing that since like 1996. And as a life insurance, I have a license in life insurance. And yeah, so I have a lot of knowledge that I've learned over the years, and I'm committed to sharing it all with you. So feel free to ask any questions anytime. Open book. And once again, my passion is to educate home buyers about the home buying process. That's what it's all about. All right, so today we're going to cover some of the commonly asked questions about buying a house. Which type of mortgage is best for me? How much cash do I need to buy a house? And how should I save for a down payment? So a lot of people are working, we're making money, and we're hustling, we're doing side hustles, we're going out there chasing more money and more money and more money. The challenge is it's not so much about how much you're making, but it's really about how much you're saving. So if you're not saving, then you're just hustling. You're on this treadmill and you're just going. So what we're going to talk about today is how do we get that money? How do we get that money saved? All right, let's move on. So, all right, just dancing with this technology here a little bit. All right, so what you want to do is you want to decide on your priorities. That's very important. I think I skipped a few steps here. All right, let's go back. Okay, so we were at the commonly asked questions. All right, now, how do you save money to buy your new home? We're going to talk about that. And as we're talking about that, if you have any questions, please just click on the chat button, ask any questions, or just chime right in. And I'll be more than happy to answer any specific questions. So we're going to dive in now. So the first thing you want to do when you start thinking about how to save money to buy a home is you always want to get down to the nitty gritty. First, you want to know what kind of mortgage is best for me. Obviously, most people have no idea about the mortgage business, so they don't know. But this is where I come in. All right, as a mortgage professional, I can help you find that out. So let's talk about one of the biggest myths in the business for home buyers. The biggest myth is that you have to have 20% down in order to buy a house. What that would mean is that you would need, if you're buying a house for $500,000, you need $100,000 down. I'm here to tell you that you don't need that. All right. So let's walk a little further into it. So the question is, how much should I save for a down payment? So now the myth is like this, as you can see on the screen. If I want to buy a $500,000 house, 120% down would be $100,000. But we have programs. There are programs created by Fannie Mae, Freddie Mac, FHA, would allow you to buy houses with as little as 3% down. What that means is now with a $500,000 house, you can buy a house with as little as $15,000 for the down payment. All right. So with the down payment of $15,000, you can get started buying the house. Now, if you don't have the $15,000, what are we going to do? And that's what we're talking about today. How are you going to save money to buy your new home? And so before we go there, you know what? I want to give you a quick case study. Let me see if I can pull up this other screen for you. All right. Can you see this one that says case study? I want to make sure you guys can see the same screen I'm seeing. Somebody tell me if you can see that. Yes, give me a thumbs up if you can see that.
Case study, no, how to save money.
How to save money.
Oh, you still see how to save money? All right, so I want you to
Mhm.
see case study number 1, so I'm going to share the screen. Hold on a second. Boom, boom, boom. Case study number 1 is right here. Share that one. All right, you can see it now, case study number 1?
Yes.
Yep, there it is.
Okay, this is a case study, all right? Before I go into it, I want to share with you. So a case study is a study of something that has already occurred, all right? So by sharing with you a case study, you're going to learn what people are experiencing out in the field. And this is just one example. This is an example. It's not a guarantee. These results are always not typical, but it's similar. And the purpose of this is just to give you an idea. All right, so let's go back, share that screen. Boom, boom. All right, you see it? Case study number 1, right?
Yes.
All right, so the credit score, you see this house here? This house is in Danbury, Connecticut. This is a 1-family house. And this is a house that I've helped finance because it was listed and sold, right? So we participated in the sale of this house. The person had a credit score of 654. Now this house, ooh, easy. All right, so this house got an accepted offer in 1 week because right now the housing market is hot. People are coming out and they're bidding. The asking price on this house was $520,000. The size of this house is over 3,000 square feet, so it's a huge house, relatively speaking, right? 3,000 is typically a larger house. They received a $525,000 on this house, so they got $5,000 over asking. The down payment on this house was $18,375. And the total cost to buy with the closing costs and the down payment was $28,000. And you look at these pictures, you know, that's the back of the house down here. And this is the living room. So this is a really nice house. So you can actually, you know, get your living. And look at the kitchen. You see the size of the kitchen there?
Yes.
So you can, you know, life is good. This is Connecticut. The property taxes here were $8,000. Now the monthly payment on this house, as you can see at the top right, after all is said and done, including the taxes, interest, principal and interest, taxes, and the insurance, was $3,069. Okay. Now, once again, this is Danbury, Connecticut. I think most of the people here are probably from New York. So if you look here, you can see driving from the Bronx, New York.
That's pretty far.
Well, it's 58 minutes.
Yeah.
Right?
Nice drive.
That's not bad. That's not
No, what one person's pretty far as another person says, hey, I could do that, you know?
I could do that, yes.
Yeah, and there's a lot of people who are traveling from New York to Danbury and traveling from New York to Middletown. Now this is new, this is a different state. Now the closing costs in Connecticut are a lot less than you'll find in New York, all right? So I just want to point this out to you. And remember, we're talking about saving money to buy a house. So don't panic here, we're just pretending, right? So don't say, oh, I don't have all of this money. We're going to get to how you're going to save the money, but I want to give you a little motivation before we dive into that, right? So you see the top on the right-hand side where it says the closing cost is $9,000. That's a Connecticut.
Yes.
Yeah.
That's in Connecticut.
Sure.
All right, so we're going to go to the next case study. This one is Middletown, New York. This is another 1-family home, Middletown. That says Connecticut. It's a typo up there. It's not Connecticut. This was in New York. All right, same credit score in the 650s. Now, this one had an offer also in a week. Look at the asking price on this one. This is a $215,000 house in Middletown. Oh man, there's another typo here. All right, the asking price was $215,000. It wasn't $525,000. All right. So the down payment requirement on a $215,000 house is 3.5 with an FHA loan was $7,525. So the closing costs even though the price was $215, the closing cost was the same, $9,000, because the closing costs in New York are a lot larger than they are in Connecticut. The property taxes here were lower because it's a lower price house and it's a different kind of neighborhood. And so the final monthly payment here was $1,615. And that could be considered affordable. This is why people are driving up to Middletown. And so if you look here, this is in the state of New York. So if you're driving from the Bronx to Middletown, Connecticut, as you can see here, the shortest route according to Google was 1 hour and 22 minutes. So
No
actually,
bad.
even though you're in the state of New York, it takes you 22 minutes longer to get to this destination, right? So that's just an example. These are case studies. And every time we do these seminars, no matter what topic we talk about, I would like to include these case studies to give you a really clear idea of what people are dealing with and what they're getting into with these houses. And just to show you what's possible for you. So now we're going to go back.
So how is it the closing cost is so cheap? 9,000? That's still pretty.
Well, in New York State, we have what's called a mortgage tax. In Connecticut, there is no mortgage tax.
Does the tax change as you go further towards the city?
Yes, county by county, you will receive a different tax. And also, if you're in Yonkers, Mount Vernon, or White Plains, or the Bronx, or the 5 boroughs, you'll pay a different tax, because sometimes you'll pay Mount Vernon a little tax, as well as, so everything is different in different counties.
Oh, I see.
So let's dig in. Now, how are you going to save money to buy your house? How are we going to do that, right? Before we do that, does anybody have any questions?
I have a quick question. Hi, this is Elizabeth.
Mhm.
I noticed that sometimes some homes, let's say I go see a home on Maple Street, and the property tax on that home is like $14,000, and then I'll go literally around the block on Smith Street, and the tax for that home is $10,000.
Right.
How does this happen?
That's an excellent point you brought out there. And we see that a lot. There's a town assessor who assesses what the taxes are going to be. And that's usually based on what they consider the value of the house to be. And so I'm assuming, I'm not a town assessor, but one day, I'd like to interview the town assessor. We're going to start interviewing people. And I think I can get an appointment with one of the assessors up here in Westchester. They're very accessible. But what happens is, in my opinion, they may have a value for a house that was established a while back. And you know what else? Sometimes different people are getting discounts. If you have elderly people, especially in the Bronx, if you have, I know this for a fact in the Bronx, if you have people who are elderly, they're eligible to pay lower taxes. So they get tax exemptions, tax abatements. So a lot of times when a house is being sold, you want to know what the tax will be without those abatements. So if there's a 90-year-old lady living in the house and she's paying, $1,000 a year in taxes, if you're buying it, it sounds great. But as soon as you take possession of that house and you're not 90 years old, you're in your 30s, they're going to charge you the regular rate. So sometimes you want to be careful when you're buying a house and then you see these really abnormally low taxes. All right, so you got to do a little research there. But there's different reasons why somebody pays low property taxes than others. And sometimes there's military benefits because you're military. Sometimes you're disabled. Things like that will help you pay lower taxes. Does that answer your question?
Yes, thank you so much.
Excellent. Excellent. Okay, you can see it says how to save money to buy your new home.
Yes.
Excellent. All right, great. All right, so let's dig in. Number 1, you want to start recording your expenses. All right, so now that you know, so the first thing we said is you're going to determine how much you need to save for your down payment and closing costs. You come up with a number, like that house we saw in Danbury. You're saying, well, if I could put together $30,000, I would be able to buy that house. So you want to start in your brain. First, you want to acknowledge, I can do this, right? I can save the money. I don't need 20% down. So those huge numbers, I don't have to come up with $150,000. And I'm gonna tell you, saving money to buy saving $150,000 when you don't have much in savings to buy a house means, it's off-putting. And, sometimes it makes you give up on the dream. But now that you only need $28,000, there's things that you can do. So to find out how much home you can afford, that'd be the first place to start. Now that I know I can get a home with as little as $28,000, how much home could I afford? Oh, in that scenario I showed you, I don't know if you noticed it, but the required income that the person had who bought that house in Danbury was $90,000. Right, so that means that it could have been 3 people who made $30,000 each that all bought the house together. Or it could have been 2 people who make $45,000 each who bought the house together. It doesn't have to be one individual making $90,000. So that's a good start, knowing what you can afford. And you do that by getting pre-approved for the mortgage. Okay, so now you have that squared away. The first thing you want to do is start recording your expenses. So in order to know where your money's going, sometimes I have people who make, this is strange. I have some customers who will come in here and between the husband and the wife, they'll make $200,000 a year income, right? Or even $240,000 a year income, and they have no savings. They haven't had the ability to save. And they say things like, well, you don't understand, this money goes out really fast. Gross, that's $20,000 a month. But then I'll get somebody come in here and they'll make $60,000 a year and they'll have a $30,000 savings. So it's not how much you make, it's how much you save. So what you want to start looking at is where's the money going? Right. I'm going to give you a free tool. All right. I'll email everybody here a free tool. If you don't get your free tool, just call me. It's an expense calculator. It's just a sheet of paper. You'll fill it out and you'll be able to start tracking where does my money go. If you just do it for a week, maybe 2 weeks, and start to get a gauge on where you're spending your money. Starbucks coffee is $5. We all have little habits and things that we claim to enjoy. We can't do without. We want to make it happen. But you got to really start analyzing that. Who am I giving my money to every day, every week, and tracking it? So you want to start tracking. That's number one. Once you get a gauge on what you're tracking, then the next step is you want to start budgeting. All right. So we all talk about budgeting, and to me, that's a little off-putting because who wants to budget, right? But if you start tracking and you say, okay, so for example, if I'm spending every day, I'm hitting Starbucks and handing them $5, $6 a day for coffee. And then every day I'm buying lunch out and I'm spending, I don't know, $20 a day for lunch and $7 for breakfast. That's 27 plus another 5. That's like $30 just for that. That doesn't even cover transportation. That's just eating out in the street. And then 10 days goes by, that's $300 that just kind of used to just disappear because I wasn't tracking it. I didn't know where that money was going. And so now that I'm tracking it, I can start budgeting. So I can start saying things like, well, hey, look, suppose I stop spending $300 every 10 days for coffee and, breakfast and lunch that I'm really not even crazy about. Going to McDonald's can be $15. So I can start budgeting and saying, okay, instead of spending that $300 every 10 days, I'm going to see how I can make that $10. I'll go to the supermarket. We all know what to do, but you're not going to be able to do it unless you track it. And then the next step, as you're budgeting, now you can start deciding where your money's going. And that brings us to the third section, is where you can find ways to start cutting your spending. So if you have to drink out, instead of going to Starbucks, maybe Dunkin' Donuts, or maybe the gas station, they charge 99 cents for the coffee. Here in my office, what we started doing, we buy the coffee in bulk and we make our own coffee. Somebody's in charge of making the coffee. And that's $1 that I don't even spend every day. So it cuts back on that. And as you continue to track, then you start saying, wow, that money that I was spending, I'm no longer spending it. Yep, question? So find ways to cut your spending. But you can't cut it unless you track it, right? Because you're not watching it. Number 4, you want to set your savings goals. So you need $28,000. So at this point, it becomes mathematics.
Can you please mute your
Oh, yes.
Mute yourself, please.
I'm gonna mute them. I think I can do it. Yeah, somebody's got
Some
a lot of
people,
noise
yeah,
going on in the
somebody, yeah,
background.
it's a lot of noise.
Let me see if I could put it on mute. I got you. There we go. If you want to ask a question, feel free to unmute yourself, and we can ask the question.
Thank you.
All right. Okay, so you want to start setting your hit the wrong button. Yeah, well, let's move to that. Now you want to start deciding, you can prioritize now. So now that I know that spending this $5 on coffee every day is not a priority, right? So now I can determine which is a priority and which is not. So I'm not going to spend $5 a day on Starbucks. I'm going to make the coffee in the office. And now that $5 a day, which is $25 a week, I'm going to put it in this account. So that's another thing that you want to do, is you want to start managing your money, right? So we talked about the saving goals. So if you need to save $28,000 and you see that by restructuring your habits, you can put away or redirect some money into a special account. So you open a new account at the bank, and then every week you redirecting this money over there, and now you're watching your savings grow. Short-term goals are considered to be 1 to 3 years, while your long-term goals are considered 4+ years. So now, once you have these goals set, you can actually categorize them into months and years. So now you can actually sit down and say, hey, look, I can actually save X amount of dollars in X amount of months just by changing these habits. These things are no longer important to me because I have a higher goal, which is to buy this house. So now you're setting your savings goals, you're prioritizing, you're tracking where you're spending your money, and you're living on purpose at this point. Life is good because you're living your life and you're heading towards what you know you want, and it's coming. You can actually see it coming to fruition. And I would recommend you get pre-approved for the mortgage, no matter where you are, how much cash you have. We'll do a pre-approval for you. It's no cost, right? Then you can start, I'll show you how to track your credit and all of that good stuff. And so now you have your priorities figured out. The tools that you're going to use, obviously, is the bank account. You got to get a new bank account, move that money over there. You might even want to get an automatic debit, either from your paycheck to go right into this account, so you don't even see the money disappearing. Now you're living on a lower amount, and life is good, right? And I'm watching. I had a client of ours recently who her goal, because she came in the door, she made a decent salary, but she wasn't saving. And so she knew what she had to do was move in with her sister. And she spent maybe 4 to 6 months living with her sister. And I watched her because we worked together, and she didn't spend a dime on, anything. She really just took that money and put it in the bank and just let it sit there. And her sister had it up to here by the time we was ready to close on her house, because, she's just living there and she's not spending any money. She's not even contributing to the sister's household. But they worked together. It got a little frustrating toward the end, and the sister really wanted her out, but the timing was perfect. By the time she got to the point where she had enough money, we went to closing and she got a condominium, and that was actually in Connecticut. So she did pretty good. So I've actually watched people do this, and this is not just, stuff I'm making up. I've seen people do it. And so when you're saving, you always want to set up your goals. Like we said, I'm going to go back there so you can see it. Short term is 1 to 3 years. How much can I save? If I continue to analyze and monitor, how much can I save in 1 to 3 years? And then how much can I save in 4 to plus years? 4+ years. And what'll happen is now you can start focusing on things like retirement, focusing on much larger things, even way beyond the house, if you get these habits and get your priorities in order. They're your priorities, they're your habits, they're your goals. I'm just here to support you. That's what my job is. So we talked about, the last thing was picking the right tools. And those tools would be the bank account, the direct deposit, the withdrawal from your account. And last but not least, I just wanted to go over a list of other items I had here. things that you can do. So another thing you can do, like we said, move out of where you are, downsize. That's another opportunity, right? You can say, hey, well, look, being that I'm going to buy this house, I'm spending X amount on rent. Maybe I can get out of this apartment, live with whoever for a short period of time, let them know what your goals are, what you're up to, and how it's going to be. And they work with you, you're saving money. I've seen people do this. Another options, you can skip a vacation. So you have this thing where you like to go out and do these things. Some people go out and spend $10,000, not even realizing it, even running up credit card bills. And sometimes that's detrimental too. That's a big no-no. If you have a lot of debt, you might want to. Now, what I would do, honestly, is I would save the money, and I would rather have the money in the account alongside the debt. And then when I'm ready to pay the debt, I can pay the debt. But it's good to see that you have the ability to save and let the money stack up, because you'll start to feel your own power, and you can really grow into your own power, knowing that this is that you're in control. All right. So you want to make your savings automatic. You have tons of tools out there to do that with the different banks that you bank with, and then you'll watch your savings grow. So now a couple other things: side hustle. You can drive an Uber. You can get a part-time job. It's easier to do these things when you have your priorities in order and you know where you're going. Now that you get a side hustle, you can actually take that money and put it into your bank using your direct deposits. Chopping down debt is important. And I think that's about it for today. Downsizing. Yep, that's it. So the pre-approval is one of the centerpieces. So if you have friends, family, coworkers, church members who want to learn more about buying a home, and getting the pre-approval is a fresh start to getting your goals in place and then moving forward. And we work closely with people to educate you and hold you accountable, I guess you could say, and just help you get to the keys to your new home. All right. So I look forward to answering any other questions you have and working with you until you get those keys. Are there any questions that you might have?
I have a question, Mark.
Yes.
If you had a choice between the FHA loan
Yes.
and the conventional loan, which one would you choose? And
That's an excellent.
Keep in mind that the person has pretty good credit.
Yes.
And let's say they have over $30,000 saved.
Over 30,000.
Yes.
Okay. Now, both of those tools are wonderful, right? FHA is now let me just clarify. Conventional loan is considered to be Fannie Mae and Freddie Mac. Those are two quasi-governmental agencies, and their job is to buy loans on the secondary market.
Then maybe I used the wrong terminology. Let's just say a regular bank. Let's say it's Chase, Bank of America, Citibank. That is willing to give you a loan.
Yes.
Just based off your credit, based off what you have saved. And then you have the FHA loan and you've never bought a house before. I wanted to know which would be the best option you think for a home buyer.
I got where you're coming from, but I just want to just throw a little clarity in there before I answer the question. All right.
Okay.
When we say conventional, what we're talking about is Fannie Mae and Freddie Mac.
Okay.
Those are the two lenders. Those are the two driving forces in America that make mortgages happen. That's it. Okay. Those are conventional loans. And the reason that they exist is to buy the loans from the lender. So no matter where you go, Chase, Citibank, Bank of America, come to me. I'm a mortgage broker. I'm a licensed mortgage loan originator, and I work with a mortgage brokerage. So we search from all of the different banks, and we can find the lowest rates, terms, and everything. But lowest rates and the best terms.
Okay.
All lenders pretty much sell their loans to Fannie Mae and Freddie Mac. The reason that they do that is because they need more money to make more loans. Most lenders do not lend their own money. What they do is they package up these loans. They might lend it to you for a short period of time, and then they sell it off to Fannie Mae and Freddie Mac. That creates liquidity. Now, FHA is a government program that will insure loans for Fannie Mae and Freddie Mac. If your credit score is low, or if your circumstances aren't the way the normal lenders, the Fannie Mae and Freddie Mac would want your loan to look like.
Okay,
Does that
okay.
make sense?
Yeah, it makes perfect sense, yeah.
So with FHA, so when you go to get a regular loan, it always starts out as a conventional, right? And
Okay.
then maybe your credit score is too low. So at that point, we'd have to get the FHA mortgage insurance to guarantee the loan for Fannie Mae and Freddie Mac, just in case, you know, things don't go right. FHA will take the loan and take the house and sell it off. Does that make sense?
It makes sense. It makes
Quick-
sense.
Okay, quick example. Give me a quick example. Somebody comes in, and we have this all the time. They have a 599 credit score, and they want to buy a house. They can't qualify for a conventional loan because most conventional loans want higher credit scores.
Gotcha.
Okay, so we go FHA.
Okay, gotcha.
Yeah, so it doesn't matter what bank, but now if, just to add a layer on to that, if you go to these other banks, a lot of times they're very picky because they advertise a lot and they want to really get the best borrowers, and so they'll turn down a lot of people. Where we work with anybody who'll come through the door, right? And I don't work for the bank, I work for you. I'm the broker. So we really work for you to get you the best terms, lowest rate, and get that deal done.
Okay.
Does
got
that
it.
answer your question?
Yeah, it does. It does. Thank you.
Okay, great. Anybody have any other questions? All right. So we'll be doing this again. We'll have another one on this topic on Saturday morning for those who couldn't make it tonight. And then next Thursday, we'll have a new topic. We have some great topics coming up. So we'll send you the invite for the next one. We'll keep you on the list. And I'll be appreciated if you invite your friends, family, coworkers. We're totally dedicated to building our community, empowering, enriching everybody, and making sure that we can all live an independent, dignified lifestyle. And of course, make a lot of money, right? As we do that. All right.
Thank you.
Yeah,
Thank
call me
you.
anytime
Thank you.
for any
Appreciate
reason.
it.
You guys have my number and everything. All right. Let's get a pre-approval.
All right.
Good
Thank you.
night.
All
Thank
right. Have a
you.
good night. All right. Bye.
Bye.